Despite the crypto market currently going through a slump, the future is still very bright for those willing to stick with cryptocurrencies. The current market is highly connected to Bitcoin, so whatever direction Bitcoin takes, the other coins tend to follow. This is slowly changing, and other coins like Ethereum are starting to buck that trend, but it's still the case that when Bitcoin sneezes, the other coins catch a cold. There is also a lot to be said for looking into gaming tokens, but please do your due diligence, and beware of pump and dump schemes. So with that said, let's look at 6 ways you can still make money with cryptocurrency. 1. Lending/borrowing. Earn extra money from your crypto investments by starting crypto lending. Cryptocurrency lending involves the participation of borrowers and lenders and agreements between them. Several crypto exchanges support crypto lending, including Nexo, Salt Lending, BlockFi, Oasis, and Celsius. Specifically, cryptocurrency loans include contracts in which borrowers pledge their holdings of cryptocurrency as collateral, lenders accept terms and offer cash or other cryptocurrencies, and borrowers agree to pay interest to lenders. Typically, in a cryptocurrency loan agreement, the borrower and borrower are individuals, not organizations such as banks. The bottom line is that cryptocurrencies are at the heart of loans that are used as collateral or as the primary source of borrowed value. Thus, lenders can borrow crypto assets or holdings and benefit from interest payments in the form of additional crypto assets. Of course, this is not without risks, and finding platforms that connect potential borrowers and lenders can take some time. But again, if you are looking for a way to make your cryptocurrency work and earn extra money, lending it is one of the possible ways worth exploring. 2. Traditional buy and hold. The method of making money from crypto is preferable for people who are ready to take risks. It means getting crypto assets of your choice from a crypto exchange and purchasing more when prices drop, traditionally called buying the dip. After months or years, at a significant overall profit, the asset might be sold compared to the purchase price. Well-established crypto coins like Bitcoin, Ethereum, and Litecoin rise and fall daily, but if we look at the chart, we find these coins have maintained an upward trend across the year. New coins like Chia are more likely to debut at a higher price due to the hype. Later, it loses value and requires a long time to recover. Sometimes they are likely to disappear if there are not enough buyers in the market or the utility of the function performed is insufficient. It is vital to read the white paper for that coin before deciding which cryptocurrency to use as a long-term investment. It will give you a fair idea of the origins and purpose that it serves and provide enough data to allow it to stand the test of time. Don't forget to share the love and leave a like. 3. Trading. Investing is a long-term venture based on a buy and hold strategy, but the trading is utilizing short-term opportunities. The crypto market is unpredictable. In a simple term, prices of assets can rise or fall in price dramatically over a short span. You require proper technical and analytical skills to be a successful trader. You will need to analyze the market chart of the performance of the listed assets. So, you can make an accurate prediction of the price rise and fall. While trading crypto, you can buy or sell, depending on whether you expect the asset's price to rise or fall. This means you can make a profit whether the price goes up or down. Ways to enhance your trading strategy. Various ways are there to minimize the risks involved in trading crypto. Here are some of the top ways to enhance your trading strategy. Diversify your trade. Combining various currencies will help to minimize the daily risk associated with a specific coin. Minimize trading cost. Choose a trustworthy exchange that has low fees to reduce the cost of trading. Watch trading time. Plan the trading time that matches your schedule. Follow crypto news. Get updated on crypto news and stories to stay ahead of the market. Use technical analysis. Practice technical indicators. This will help you to justify each of your trades. Use stop losses. Set stop loss orders on every trade. Begin with a profit loss rate of 2 to 1. Staking. Since the energy required to run a POW blockchain is extremely high, some blockchains have developed a seemingly better validation algorithm called proof of stake, POS. Instead of using energy and hardware to execute complex cryptographic puzzles, the POS algorithm forces users to stake, their tokens to verify crypto. Staking is the action of blocking digital assets that act as a validator in a decentralized cryptographic network to ensure network integrity, security, and continuity. Stakeholders secure their assets to serve as nodes and validator blocks. Stakeholders are paid with the newly created cryptocurrency as an incentive to help secure the network. Pros: a cheaper approach to obtain money from cryptocurrencies. Cons: price fluctuation is the largest danger. 4. Airdrops. Of all the ways to get free cryptocurrency, airdrops offer the highest risk. It's more than you think worthwhile for most investors. Developers perform airdrops when they want support for new cryptocurrencies. In a nutshell, they give the free coin to try to adopt. You can check on the internet when the airdrop project is in progress. They are often promoted by users on the company's website, social media, and other crypto news platforms. It is crucial to be careful with any new crypto project. Fake airdrop and initial coin offering, are common scams used by hackers. In reality, many coins issued in the form of air bubbles are not very valuable investment stores. Experts recommend sticking with the more well-known cryptocurrencies, Bitcoin and Ethereum, especially for newbies. If you follow these recommendations, switch to airdrops. All cryptocurrencies obtained through airdrops are also taxable income. According to the IRS, you must report based on the fair market value of the date of registration on the distributed ledger, in most cases when receiving airdrops from digital wallets. 5. Mining. Mining is an important part of the proof of work (POW) consensus mechanism and is one of the oldest ways to earn money with cryptocurrencies. This is the process of validating transactions and securing a POW network. To perform these functions, miners receive new coins in the form of block rewards. In the early days of Bitcoin, mining was possible on a desktop computer, but today, specialized mining hardware is required. When it comes to network maintenance, starting a master node is also profitable. A master node is a wallet that hosts a copy of the entire network. These two methods require a substantial amount of initial and ongoing investment backed with technical expertise. 6. Dividends. Another method to get money with your crypto assets is to earn dividends. If you're familiar with investing in stocks or bonds, you're probably at least aware of what dividends are. To elaborate in simple language, dividends are small cash payments made to shareholders. If a company makes profits for a quarter, or a year, that depends on sole proprietorship, it splits those profits and returns them to the ownership of the company, shareholders. While you may not see a tidal wave of dividends hit your crypto account without a large balance, it can be a way to make money with the crypto you already own. However, you need to do some research to see which cryptocurrencies are paying dividends and whether the dividends are worth it. Some cryptocurrencies that pay dividends in more coins, or tokens, include VeChain, Neo, Redcoin, Navcoin, Decred, and their annual dividends broadly. Therefore, cryptocurrency dividends differ from stock dividends in that they pay additional tokens rather than cash. What is your strategy when it comes to cryptocurrency? Let us know in the comments section below.